After a first quarter marked by dismal gross domestic product and a tepid stock market, the second quarter of 2014 brought welcome change. The S&P 500 posted a second quarter gain of 4.69%. Hiring picked up and so did inflation. The housing market left its winter slump behind. Gold rallied and so did oil, with unrest in Ukraine and Iraq providing some upward pressure on prices. The Federal Reserve incrementally reduced its bond purchases on schedule. Was the first quarter simply a bump in the road for the economy? History may record it as nothing more. Two notable trends emerged in the quarter. The job market improved and yearly consumer inflation aligned with the Federal Reserve Board's target. In tandem, these developments made Wall Street wonder if the Fed might raise interest rates a little sooner than anticipated. By the end of the second quarter, the unemployment rate was down following modest job gains in April, May, and June. In fact, by June, the economy had created at least 200,000 jobs in 5 straight months, something that hadn't happened since the late 1990s. While the jobless rate went south, consumer prices moved north. The federal government's Consumer Price Index rose in April, May, and June, taking yearly inflation to 2.1%. Retail sales were up too. They rose in April and May, even as consumer spending was flat in April and up just slightly in May. Armed conflict and the threat thereof gave investors pause in the quarter. The Islamic State's takeover of some of Iraq raised worries about oil exports from that country being disrupted. Some interpreted Russian troops hovering over the border of Ukraine as a prelude to invasion and possible interruption of natural gas delivery to the Eurozone. While these fears exerted pressure on natural gas and oil prices in the quarter, there were no systemic shocks. Most of Iraq's current oil output occurs south of the present combat zone, and Russian natural gas deliveries to the Euro area through pipelines in Ukraine were not slowed. Now, as for China, its manufacturing went back into positive territory in the quarter. China's factory sector revved down. That led some economists to wonder if the People's Republic might resort to a stimulus to keep its growth at its target. A stimulus might also be in order in Japan. Its manufacturing fell in March and industrial production slipped in February. The comeback of gold continued as futures rose in the quarter. Silver and platinum also climbed during the last 3 months. As for the dollar, it wasn't quite as fortunate. The US dollar index was down slightly. Natural gas futures, heating oil futures, and unleaded gasoline futures all rose during the quarter. Fortunately, the housing market heated up again with the arrival of warmer weather. Existing home sales rose in April and May. True, existing homes weren't quite moving like they had a year ago, but on the bright side, home prices had increased in April and the pace of new home sales reached a 6-year peak in May. Another factor aided the real estate market: cheaper mortgages. We saw some pronounced declines for average interest rates on home loans as the month of June drew to a close. The second quarter of 2014 was the 6th winning quarter in a row for the S&P 500. Only once in the past 50 years had it had 7 straight winning quarters. The Russell 2000, a U.S. small-cap market index, notched its 8th straight winning quarter, a new record with a gain of 1.7%. The major geopolitical crisis of 2014, the tensions between Russia and Ukraine, the Islamic State's takeover of parts of Iraq and Syria have had no profound effect on Wall Street. While volatility hasn't been absent from the market, we haven't seen much of it as of late. Investors seem more preoccupied with what the Fed might do over the next 6 to 12 months. The possibility of sudden crisis aside, the feeling persists that a return to equilibrium in central bank policy might rein in the bull more than anything else. As quantitative easing 3 presumably has a few more months to go, and as an interest rate hike seems at least a couple of quarters away, the third quarter might amount to relatively smooth sailings on Wall Street. And decent earnings and solid economic indicators might provide a little more of a tailwind for stocks. As always, we appreciate the trust you've placed in your LifePlan Wealth Management team. If you should have any questions, please contact your relationship manager. Have a great summer, everyone.